Hi winners, look, welcome to Terry's Tips. Guys, get a notebook, get a pen for real today, okay? Because this is about to be a learning, teaching video because I'm seeing some huge mistakes and you guys are missing how to get this money. You saw the title, how to get $50,000, y'all, in less than 24 hours, and guess what? And so I'm about to show you guys how to do this. And the biggest mistake I'm seeing is that you don't know where to go to get the money or what type of money you qualify for, guys, okay? So in this video, I'm gonna explain to you the process and I'm gonna give you 10 key factors, guys. You need this. This is the missing link. This is why people come to me for what? The big money, 50, 60,000, 100,000, 6 and 7 figures, guys. And I could have borrowed more. I could have taken more, but I didn't need it, so I didn't. But guess what the key factor is here? Guys, I didn't even apply for the money. This is the offer that was sent to me. Come on, somebody, how to look good on paper and how to leverage, okay, guys? So let's jump right in. And if you are new, welcome. Guys, my name is Terry. I'm a self-employed entrepreneur, a mother, YouTuber, personal and business credit guru. Guys, I upload brand new videos every Tuesday and Thursday. And our goal over here is learning how to leverage your personal and business credit to build wealth, guys. Okay, so 10 key factors. And guys, you need to understand this because if I just give you the lenders and you don't understand what you need to do to qualify or what type of credit you actually need to grow your business, you're not going to have any results. And guess what? This is faster and more money than liquidating credit cards. Come on, okay? So let me jump right in. So number one, you have to understand the different types of business credit. Guys, you come to me and you're like, I want business credit. I want business credit. I'm like, what kind do you need it? What do you need it for? And you're like, I don't know. Make a plan, work the plan. How can you guys put together a plan? How can you know how to look good on paper? And how can you know where to go to get the money if you don't even know what type of business credit you want or you need or that's out there? So let me just do a recap for you for business credit. That can be net 30 accounts. That could be vendor accounts. That could be tier 1, tier 2, tier 3. That could be business credit cards, business lines of credit, business loans, term loans, auto financing, working capital, equipment financing. Guys, you get it? So one thing you guys need to understand is what type of credit do you need to build your business? For a lot of you real estate investors, for a lot of you new business owners, you actually need like $50,000, $60,000, $70,000, and then you guys are getting business credit cards, which can give you that amount. But guys, always remember, credit cards are really meant for purchases. Even though there are ways to liquidate it, is that the best way to use those cards? No, and they sometimes make you jump through hoops? Yes. So strategy, come on somebody. But this is where you guys are not qualifying for the money. You're not getting the actual results that you want because you're using the wrong type of credit for the thing that you actually need. So honestly, instead of trying to get high limit business credit cards, if you're trying to get $50,000, $60,000, $70,000, guys, for down payment, for renovations, to pay a contractor, it's actually smarter, a little bit wiser, a little bit easier and faster to get the money if you guys go for like a line of credit or a term loan. So understand the kinds of business credit. All right, step number 2, this is the big one, this is the big thing that you guys are missing, is the types of lenders. OMG, y'all. This is where y'all messing up. So four categories, okay? You must understand this. This is why I give people big results. The first category for business credit is going to be fintech companies and alternative lenders, okay? These are lenders that are outside of traditional banks. I'm going to break it down even more. The second type of lender, guys, is going to be your traditional banks. I'm going to throw in your credit unions, okay? So your banks and your credit unions are going to be your BB&Ts and your Santander and your Citizens and your Wells Fargo and your Bank of America and your Navy Federal Credit Union, right? Banks and credit unions are the second type. Now, the third type, guys, is SBA, right? So the SBA is their own financing, their own kind of lender, and they have some of their own terms, okay? So that's the third type, SBA financing. And the fourth one, guys, that you all are missing, that I got the money from today in less than 24 hours, is payment processors. So I'll break it down. And your payment processors are like your Square, your PayPal, your Stripes, your working capital, okay? So you must understand that some of you guys are not having success because you guys are going to the wrong type of lender and looking for the wrong type of credit. Okay, guys, and I am going to go back into this video and put some of the top fintech companies, probably like 3 or 4, and top payment processors in the description of the video. I'm going to give you guys some action items, okay? The third thing, guys, is you need to understand the difference between a line of credit, a credit card, and a charge card. Write it down. Line of credit, credit card, charge card. So guys, for a line of credit, and all 3 of them are revolving credit. It does give you the most flexibility because you can use it for whatever you want and you can keep on using it. Okay, that's one reason why it's the best kind of financing to get, and those are all unsecured, which is the reason why you need to know what they're looking for to approve you, which I'm also gonna give you, okay? So for a line of credit, you can get approved from a lender, let's say for $50,000. And what happens is that until you don't pay any money back until you draw the money. So if you have $50,000, you take $20,000 of it for whatever it is for your business, you'll start to make payments on the $20,000 once you actually draw the money and use it. Now, what else is going to happen? If you can, once you pay the money back, it's available again. So being strategic, using it the right way, it can like fund your business. It can help you grow your investing. It can really, really, really give you good results. Now, a credit card. You can get $10, $20, $50, $80,000 business credit cards, guys. But is it meant for you to just take $80,000 off of there? No. Have I done videos on liquidation? Absolutely. But is that the best use of it? Usually when you have a business credit card, you're using it for purchases. Now, mind you, if you have a $50,000 credit card and you're somebody who rents cars on Turo and this Toyota Camry is $20,000, well, you can charge it on your credit card, guys. Like, be smart. But is it easier just to charge the card on the car on $20,000 on the credit card, or try to liquidate that money off? Trying to liquidate $20,000 off of that card is going to be you're going to jump through some hoops. Okay, so understand that credit cards are really meant for purchases. Even though there are ways to liquidate, it's going to cost you money and it's going to be a lot of steps to actually getting it, and you'll never get the full amount, guys. Okay, now the blessing with it is if you charge the money, then once you pay it back, it's revolving, so you can use it again. The third one, guys, is charge cards. Remember this, remember this, remember this. This is like the Divvy, sometimes Capital on Tax, the Brex, the American Expresses, guys. This is where you can have high limits again, 10,000, 20,000, 50,000, 80,000. But when you use the money, come on, somebody, it's due in like 30 days. So this is where I had somebody in one of my courses say, I want to use $25,000 for a down payment on a hard money loan. And I'm like, well, if you use $25,000 and it was on a charge card, that $25,000 is due in 30 days. Your flip is going to take 6 to 13 months. You do not want to destroy your business credit, guys. So understand the difference between a line of credit, a credit card, and a charge card. The most flexibility is always going to be a line of credit, because it's just going to direct deposit the money into your checking account, which is what they did to me today. And I can use it for whatever I want. I can take cash out. I can write checks. I can Mac it out. I can do whatever I want. Okay. So knowing the difference. Now, number 4, guys, is the documents needed for the levels. Your fintech companies, your alternative lenders are going to need the least amount of documents. They usually just want your bank statements and your routing number. Today, when I got the financing, literally all they asked me for was my routing number and 4 months bank statements. That's it. I didn't have to send them EIN. I didn't have to send them articles of incorporation. I didn't even have to send them ID, guys. That's all I had to send them. So your lowest level of documentation is always going to be the fintech companies and the alternative lenders, okay? Your banks and credit unions are going to want more documents. This is where they may want ID. They may want your articles of incorporation. They may want your EIN. Your SBA is going to want even more documents, right? They may want taxes and your profit and loss statements and all of those things, expenses. I've even seen them want like salary information for your employees, right? And then your payment processors are also going to be low. Usually they can gauge your revenue by the amount of money you funnel through their actual system, which, guys, real quick, the money I got today was through PayPal, and that's my lowest payment processor. Probably about 10 to 15% of my revenue at the most. And they gave me, they offered me $57,000. I only took $30,000. So I'll get into that at the end, okay, guys? So it's going to be the lowest level. So the reason why I'm breaking this down for you guys is that all of the types of lenders have pros and cons. I need you to understand this so you can get results, okay? The fifth thing is speed of funding. The alternative lenders, the fintech companies, guys, hands down the fastest speed. If you need money quick, Literally, I got an email, I think it was like 8 or 9 o'clock this morning. I said, okay, this offer looks kind of good. Let me go for it. Soft inquiry, guys, that didn't even apply for it. They said, hey, you can have $57,000 right now. I said, I don't need $50,000. Give me $30,000. He said, send me your bank statements. Give me your routing number. Sign a DocuSign agreement. The money has now been in my account for 3 hours. And literally the time frame, less than like 5 hours, guys. So the fastest speed is always going to be your fintech companies and your alternative lenders. The banks can sometimes take weeks, right, to actually do this for you, but they can do it. The SBA can take weeks or months, guys. They take a long amount of time. So if you need money quickly, it's going to take a lot longer if you use like SBA financing. And then the payment processors, which is who PayPal is, did it in like less than 24 hours. So speed of financing is one of the 10 key factors you need to understand and you need to consider. Now, the next one, number 6, is the amounts. Guys, working capital, like the PayPal, the payment processors, the fintech companies, a lot of times their loans, their lines of credit, their equipment financing all go from like $5,000 up to like $100,000, $150,000, $350,000 I've even seen, right? But let me ask you something. Could $30,000 help you out today? Could $50,000 help you out today? Come on, somebody, because when you get that actual amount, you use it and you pay it back. What happens with business credit? They offer you more. And another nugget here, my guys, is that you're applying for things when you don't need the money. Now, I didn't even apply for this and they offered me the money and I didn't take the full amount. That's the nugget right there. They offered me 60, I took 30. Pay that back. Now the next time they're like, oh, here's 80, here's 90, here's 100. They've offered me more, but without me actually formally applying, that's a good offer. So understand that, okay? So the amounts. Number 7, this is a lot of information, is the rates. Now this is where y'all are killing me, okay? So the fintech companies and the alternative lenders are going to always, always have the highest rates. Guys, they are approving you super fast for unsecured credit, and they're just asking for bank statements. It's high risk, especially for a lot of my audience, because a lot of you guys are new business owners, new entrepreneurs, or even if you've been in business a long time, you're new to establishing and leveraging business credit. So understand, yes, the fintech companies, hands down, more money, faster, will fund you fast, low documentation. Those are the pros. But the cons are is that it's going to be higher rates. The banks are going to have better rates. SBA is going to have the best rates. And the payment processors are kind of like the fintech companies and the alternative lenders where the rates are going to be high. So why am I telling you that? Don't be like, oh my God, I got $30,000, but they want 15%. Well, guess what? They gave you $30,000 when the bank said you get 0. Let that hang in the air for a minute. Guys, you have to crawl before you walk. And so the reason why the fintech companies and payment processors are good for leveraging is because when you're using it for things that can be income producing, multiply your business, you can pay it back, and then they give you better terms, more money, to keep on growing and growing and growing. And basically, when it's a well-oiled machine, the business funds the business. The business funds the business. You're not using any of your own money at all. So SBA is going to have great rates, but a lot of you guys don't qualify because y'all ain't do your taxes. The addresses don't match, and you don't have all the documentation. It's going to have the best rates, right? But it's going to take months to fund. So the SBA is going to have great rates, all those things, but you're going to take months and months and months. So there's pros and cons to all of these, which is why I outlined the 4 types of lenders. Know the pros and cons for all of them, and then be realistic about your expectations and only apply for the things that you want and that you need and that you can qualify for. Nugget right here. I want to simplify things for you guys. There's 3 things that all lenders are going to be looking at. 3, okay? Your length of time in business, that's it. Your revenue, that's it. And also your documentation. Your personal business credit, because there's documentation too, but I want you to focus on those 3 things. Guys, it's just going to vary. Some fintech companies will actually fund you being in business 3 to 6 months. Sometimes SBA wants you to be in business a year or 2 years. Well, if you've been in business for 6 months, and you don't have any taxes, then why are you applying for SBA financing? Why are you going to Bank of America? Why are you going to Wells Fargo? You need to match yourself up with the lender that has a requirement that meets your needs and that you can actually qualify for. It's the biggest gap I'm seeing. You guys are going to the wrong lenders, okay? Terms, this is number 8, okay guys? The terms, the fintech companies, the alternative lenders, and the payment processors are going to have short guys, payment terms. year, 2 years, 3 years. So again, you guys like, I want $100,000 in business credit. And they're like, cool, here's $100,000. And you have 12 months to pay it back. Do you know how much money that is a month? Make sure that if you're taking $100,000 and you get to pay it back in 12 months, you're putting it into something that can give you that kind of return. Or don't take that whole amount, or don't use the whole amount, guys, okay? So it can be short terms. The banks and the credit unions are going to have longer terms. 2 years, 3 years, sometimes up to 5 years. SBA is going to have even longer. The longer your repayment terms, the lower your payment, okay, guys? But understand the fintech companies will fund you in a day, give you a lot of money, but you're only going to have a year, sometimes 2 years, sometimes 3 to pay it back. So be smart about your monthly payment and your capacity, come on, somebody, to pay that back without going into default. The next thing, number nine, you guys are really missing this, is the repayment schedule, okay? Write that down. For business credit, they can have weekly, bi-weekly, monthly, and even daily repayment. So some of you guys are like, yes, I got $80,000. And then you don't realize it's a daily repayment or a weekly repayment. Pay attention to that because it's not always monthly, especially for business credit. So a lot of times the banks, the traditional banks, the credit union, the SBA may have monthly, maybe even bi-weekly payments, but the fintech companies, the alternative lenders, the payment processors, they hands down can have daily and sometimes weekly payments. And sometimes you just do that in the very, very beginning, guys, and then you actually can kind of graduate to like a longer repayment schedule, but that's it. Just understand the terms. And then step number 10, guys, sign your documents. Sign your contracts over your documents and get your money. Literally, that's what happened to me today. All I did was got an email from PayPal saying, hey, do you want $57,000? I looked at the terms and said, sure, I could use $50,000. So they said, fill in some information. I filled in the information. They said, slide it to tell me how much you need. I said, well, I don't need $50,000, but I do have a marketing campaign going on. So it's like, oh, I could use this for that. So I did $30,000. They literally said, send us 2 things. Your routing number and your account number, which I did, and they asked for 4 months bank statements, guys, 4 months. I sent them 4 months bank statements. I sent them my routing information. They sent me a DocuSign agreement. I signed a DocuSign agreement, sent it off. They direct deposited money into my account in 2 hours. You're done. Literally because I have a payment processor, I only use them sometimes. So what did I say in one of the other videos? Stop using Cash App and all those things. I have Stripe. So I just want to recap for you, okay? So there was 10 kind of key factors you need to understand when trying to get business credit, guys, and literally you can get funding in a couple of hours. I'm going to go back into the description of this video, guys, and put some top fintech companies, top alternative lenders, and working capital for payment processors, because that's how I was able to get, well, they offered me $57,000 without me applying. I only took $30,000, but I could have easily taken $50,000 if I actually needed it. But literally, when I send you, I'm going to post the actual emails. It started at 10 o'clock today. They approved me and had everything in my account by like 1 o'clock, guys. So it can happen. So the 10 factors, okay, was type of business credit, types of lenders, understanding the difference between lines of credit, charge cards, and credit cards, the documents needed, the speed of funding, the amount of funding, the rates, the terms, the repayment schedule, and then signing your documents and actually getting your money. And the only thing I did, guys, for the actual $30,000 I got today was have an account with the payment processor and then have good business credit, have good personal credit. They sent me the documents, I accepted, you're done. Okay, guys? And for my nugget, the only thing I want to say to you is that many of you have personal and business credit goals. You're entrepreneurs, you're investors, and you need a coach, you need a mentor. I'm here for you. Don't ask for help. And then I got a program you don't apply. So if you're looking for coaching, go to the link in my description and apply. I would love to work with you. One of the things I talk about is my 20 streams of income. How I start my business with my laptop, my computer, a shredder, and a cell phone. And now how I've helped thousands of people across the nation. Guys, you can do it too. You just make a decision to be successful and align yourself with people who are doing the same things, and you 1000% can do it too, okay? So I would love to work with you. So have a super amazing day on purpose. Make sure you like, share, and subscribe. Bye, y'all.